Aditya Narain now joins us, represents Edelweiss. Aditya, good morning. Thank you for joining us. Where do we start with? There is liquidity, there is a surge in gold, there is a strong view in the market that the worst is behind us, but there's also a strong view in the market that markets right now are not factoring in FY22, they're also factoring in FY23 and FY24. So how are you approaching, or what are you telling your clients to do in this market when there is abundant liquidity, lack of clarity, no clear guidance from companies, and too much of optimism?
You put it nicely. The way I'm looking at it is our fundamental advice to clients is really to be a little cautious. So our market target for the year actually is for June next year is actually a couple of percentage points lower than where we are at this point in time. And we are really arguing that you should build a portfolio towards stuff that is a little bit more defensive. I think the key stance that we are taking is that firstly, FY22 is going to be a normal year, right? So if you want to benchmark earnings or multiples, that is the year to look at. But the second thing that we are saying is, I think there are two parts. So the second thing we're saying is, let's not look at supply. There's a lot of excitement in the market because supply has gone up, capacity utilizations have gone up. This is just a reversal from disruption. I think the bigger thing is what tends to happen to demand. This disruption, what has it done to demand? And, in our view, I think there are two ways of looking at it. One is to look at it from an absolute demand perspective level, which we believe is hard to call. The other is to look at what are going to be the drivers of demand, right? And which are the things to play. And I think that's the way we would actually approach the market, that what has fundamentally changed from a demand perspective, and those are things that are going to drive stock performance rather than necessarily the absolute level of the market or the absolute level of demand coming back.
Aditya, are banks in for a rude surprise when the moratorium window will get lifted, or the concerns in the market are slightly more exaggerated?
Okay, so I don't think it can be a rude surprise because when you're expecting so much, it cannot be rude. I think that's the starting point. I think the challenge will not be in terms of how low it could potentially go, the problem, or how deep could the NPL issue be. I think the problem really will be that it can tend to linger on for longer, and it could be a little broader than otherwise. I think that can got to combine with the fact that loan growth itself could be low. So I think if you take that combination, at a sector level, we are running an underweight portfolio, strategy weightage. We are trying to play the higher quality banks on this. But again, I'd say, a rude surprise would be a real surprise to me, quite honestly, simply because there's so much expectation of the uncertainty of it. I think the fact that it could linger a little bit, that banks won't have the appetite to lend, and so growth will be missing, I think those will be the variables rather than necessarily the depth of the problem.
The IIT Index in the month of July is up 20%, largely because of numbers which have come from the top 4-5 tech companies. Is that one-time re-rating behind IT? I mean, they certainly have surprised, Aditya, all of us, that a company or a sector which essentially is a manpower-driven sector has managed to migrate 99% of its workforce from the beautiful campuses to their homes.
So I look at it from two questions, right? The first, I don't think this is a one-time reset, and I don't think you should see it in the context of numbers for the quarter being better than what people are expecting. I think the reason why IT is doing as well as it is, and our view is it will continue to do well, is the fact that this whole disruption has structurally given a leg up to the whole technology and IT space, right? And so this trend is going to be a 2, 3, 4-year trend of momentum rather than something that you can measure in terms of the quarter being better than expected or the quarter being good in absolute terms. So I think this is actually, from our strategy perspective, this is an underlying theme that this is a quantum acceleration in the importance and the growth of the broader IT space. In fact, we would tend to believe that you could actually call it IT goes tech, i.e., we've been looking at IT in the form of a services. I think now it's going to be more correlated with the technology expansion that's been happening for a period of time, right? So I think that's one half of what you asked. I think the second thing is, in terms of have you been surprised that, so manpower intensive and the fact that they've been able to work from home so effectively. If you'd asked me 3 months back, I would have said yes. If you ask me today, no, simply because people like you and me and our businesses are also of a different nature. I think all of us have been able to adjust to this new reality pretty smoothly and clearly very effectively, right? So in that context, I think in hindsight, I don't think so. If anything, they were probably better geared for a shift like this. But I would tend to believe, this has been one of the big positive outcomes of this.
All right, we'll leave it there for today. Aditya, hope to have you back on fairly soon and get some more perspective for you as things continue to evolve. Aditya Narain there with his views. We're going to also